Good evening, students. Welcome to the session. So today we have a topic on basic concepts, and from now we are going to start your direct tax subject. Right now, this particular concept of this particular chapter, rather, of basic concepts will basically build your foundation, will help you revising whatever you have done for your IPCC, right? So basically this is just a gist of and the entire scenario in terms of like how the income tax works. Very take this topic very lightly because here we are going to discuss about the tax rates as well. So yes, this is a very important chapter. So let us quickly begin with it. uh, Let me just put my screen here.
Hello, Prerna.
Yes, good evening, ma'am.
Good evening. Prerna, actually, I just want to, because this is the first class for May 2026 examination, so I just want to give a brief to the student about the applicability and the amendments, because mainly in the first class they have a doubt ki which finance act will be applicable for them and which study material and can we read from the existing study material. So just in the 5-10 minutes, I just want to take
Sure,
up the
ma'am.
basic doubts of the students. Okay, then you can continue with the session.
Sure.
So, yes, student, this is the first class for your May 2026 examinations. This LVC is relevant for May 26, September 26, and January 2027 examination. Because for all these three attempts, same amendments made by the same Finance Act will be applicable. Your relevant assessment year would be the same. So, this class will be relevant for all the three examinations. Whatever the updates that will become by significant notification and circular or judicial update, so there will be a revisionary classes or amendment classes will be there for the each attempt after these classes. Okay, so student, first I'll just start with the basic doubt key: which finance act is applicable for May 2026? Student, direct tax laws as amended by Finance Act 2025 is relevant for these three examinations: May 26, September 26, and January 2027. Many student has doubt ki whether finance bill, if it's come in 2026, whether that will be relevant or not, or that income tax bill 2025 that is applicable for May 2026 examination or not. So students, that income tax bill 2025 is the bill just now, and if it is passed in the parliament in the monsoon session after the president assent or all this, that procedure will take time. So for May 2026 examination, the new income tax bill 2025 is not relevant for May 2026. Okay, made be clear with that. So for May, September, and January, it is not applicable. Your that Income Tax Act 1961 as amended by Finance Act 2025, that is relevant for these three examinations. Regarding the study material, students, study material for May 26 has not been uploaded on the website. We are working on the study material, but as your LVC is scheduled chapter wise, we will host the chapter of that PDF of that chapter in your BOS knowledge portal, when you that you can access after login to your account to BOS knowledge portal. So you can download that chapter as a notes from the BOS knowledge portal. So students, for this paper, it is very important to be aware of your amendment, the relevant finance act. I told you the relevant assessment year would be assessment year 2026-27. If you see the section wise weightage, that is already hosted on the website for May 25 examination, May 25, September 25. That would be the same for May 26 and September 26 and January 27. So you can plan your study after that, because it's the classes is for preparation. After revision, you can just go through the section wise weightage. You will be understand ki which chapters are relevant, how you can plan your study, how you have to give more focus to which chapter, and strategize your preparation for this paper. Because this paper, as you know, in the earlier study material, consists of 28 chapters, and all the chapters, because it's a law based papers, all the chapters, every computation is an you have to integrate all the provisions, and at that final level it is more interpretation based rather than I'll say is a provision. It's a interpretation. You have to be aware of the judicial pronouncement, and you have to interpret the provisions to apply and to test in the questioning. So that strategy would be changed from the intermediate to final level, because the final level it is more provision based or computation based, but as the final level it is more your interpretational skills will be tested in this paper. So student, this is the basic. If you have any doubt for the basic, I am not going to the question paper pattern just now in the first class, because over the period of time we will be coming to the question paper pattern and all these things. I am just giving you a brief about the applicability of material. New material will come, your finance act, your assessment year, and all these things. If you have any general doubt related to that, you can ask me. After that, Prerna ma'am will continue with the technical session. If you have any doubt, student, to the journal part regarding the applicability amendments, you are free to ask. All clear, students? Students, material, okay, I'll just tell about, because definitely study material, we have to update each and every question, the provision, everything. So definitely study will take time. So it is not released yet for May 2026 examination. But with the LVC, when the suppose today is the first chapter, after the class, by tomorrow or day after tomorrow, first chapter will be uploaded. But that is not uploaded on the website. You can download it from the notes in the BOS knowledge portal for the LVC, where you find your LVC notes and assignments. From there you can download these chapters. So whatever the faculty chapters will be taken up by the faculty in the LVC, for that chapter we will upload that chapter in your BOS knowledge portal. After login you can access that chapter. Simultaneously we will upload the study material as soon as possible on the website and would make be available to all the students for their preparation. Any other doubt, student? Your this paper is of 100 marks, and in this 30% is for your case scenario based MCQ, and for remaining 70 marks it is a descriptive based question. But in the MCQ based question, there is no negative marking, no reasoning is required, and all the MCQs will be compulsory. There will be no internal or external choice in the MCQ portion. But in the descriptive portion, there will be first question, which is a compulsory question, and out of the remaining 5 questions, you have to attempt any 4. So this is your paper pattern. Miss Chitra, assessment year for May 26, assessment year 2026-27 is relevant. So your financial year is 2025-26, previous year 2025-26, and assessment year 2026-27. It is very important, students, to be aware of assessment year and the applicable finance act, because amendment you have to see from the finance act. The next income tax bill, I am again telling you, income tax bill 2025, that is not relevant for May 26 examination. Income tax act 1961 along with the finance act 2025 amendments, that is relevant for May 26, September 26, and January 27 examinations. Is it clear, student? So Prerna, I guess you can start the technical session.
Sure, ma'am. Okay, students. So we'll start with the session. Yes. So basically, first of all, let us try and understand, like, how do you get the to levy the taxes. Like, see, for example, any country wants to introduce any tax, be it income tax, be it GST, be it, equalization levy, any tax like which is there. So where does the power comes to the government to tax? Yes, students, the question is to you. So where does the government derives the power from to introduce any kind of tax? Yes. The constitution? Yes, from the constitution. Yes, Pitambar, right. Yes, Constitution of India, Kunika. That's right. Yes, Constitution, Guram. Yes, that's correct. So, the Constitution of India, Article 265, talks about that no tax shall be collected without any authorization of the law or without any authority of the law. So the power to collect or to power to levy any taxes comes from the Constitution. Article 265, right? So even our income tax for that matter, which is there, that is also deriving the power from the Article 265 of the Constitution itself. Right? So Article 265, sorry, gives the power. So students, you have to write with me. You have to make your notes. No tax shall be collected except by the authority of the law. Yes. So students, one rule that we need to follow for these classes, at least for the lectures that I am taking with you, you are required to basically keep your notebooks ready for all the lectures because I shall be making you write too much. You have to write. You don't have to, like really be asking for notes. You will get notes for sure. That's not a problem. But the point here is that if you write, that will help you practicing for your examination. You're not appearing for a computerized exam. You're going to write with a pen and paper, right, in the examination, isn't it? So you're supposed to make your own notes because the advantage of that is, students, see, if you just hear what I'm trying to say to you, that will help you registering the concept, but not the words. If you want to register completely, you have to start with the writing. Direct tax is a practical subject. Most of the students try to change or alter the language of the provisions and try to dilute it. You will not get any marks. You are writing the final paper of your life. Like the CA final is your final paper after which you'll qualify as a CA. And this is one of the important subject. Be it this, be it any subject, you are required to write the words as is. You are not required to dilute it. You can't say deductions to the exemptions. You can't say taxable to the chargeable. That's very, very clear. You have to read the law as it. This is a paper which is of law. This paper, indirect taxes, any legal paper that you are writing, you can't alter the language. That's very clear. So when you will start writing, only then you will be able to register the things in your mind. It will be very easy for us to take the lectures, give you the notes, you will read from the notes, but the output will not be as good as you will just write and then give the output in the exam. This paper requires a thorough amount of practice, students. Even when cricketers play the match, right? The World Cup, before that, there are hundreds of test matches that they have played. You can't be sitting in exam without any practice. And the practice doesn't mean that you will only, look at the sum. Okay, plus this is disallowed, this is added, this is reduced, my sum is done. It can't be like that. The presentation is very, very important for the direct tax paper. Very important. See, when you are making this particular, the question will be asked to you, full-fledged question on the computation of total income, computation of tax liability. You can't be just, like doing the ad list. If you have not practiced, how would you be able to do it in the examination? That will be your, in fact, first test match. And we are bound to not clear it properly, isn't it? So, you have to start from today for your attempt. There is a long way to go, and every day we have to take the small steps. And these lectures which are there, these are in fact, helping you to get into that mode of doing the writing, doing the studies every day. Even before you come for the lecture, try and read and then sit for the lecture. You'll be able to grasp more. Or if you don't have time, then at least, after the lecture gets done, go and read back the module. This is very important, students. Don't rely on any shortcuts. Don't rely on any notes which tell you that these are the summary notes. That's not at all going to help. And this is one of the paper which is going to be so practically relevant for your future. The base that we will establish at this point in time, students, will help you for your lifetime. Whenever even we see the case laws today, we understand what is the basic issue behind that, why it has been decided like that, what is the basic foundation of that. If your foundations are weak, you will not be able to practice in this particular field. And this is a very day-to-day bread and butter, right? Income tax for all the chartered accountants. We are not required to just, like do the return filing. Even return filing requires you to apply your brain and advise to the client that how he could save the taxes, how you can plan well, how the provisions are to be interpreted to the best of the understanding which is available, isn't it? So how would you do that? You're not just required to mechanically do the ITR filing, because that now AI can also do. There are these days good softwares available where you just input the data, they'll give you the return. Right? But what is here important is that we understand the law from the foundations. And that's the reason why we have been given these lectures where we are required to explain you the basics of each and every provision, why this is there, why everything has a why. It is, the tax is not without any logic. There is logic available to everything, right? So you have to start with the writing practice. So the basic rule that you have to follow is you have to keep your book ready before you sit, at least for my lecture. You have to use at least 2 to 3 color pens, right? Simple. I don't want you to use like, some colors which are, like different only. Use just 3 color pens, blue, black, and red. Red is something to say it's very important. Blue is which we are writing, or black you can use, to write what is regularly that we are writing, right? And use also highlighter to highlight certain points, right? So this will help you to summarize your own notes, right? Whatever I'm teaching you, I'm not teaching you from any book. I'm teaching you from module only. So this is what the summary that we are preparing for your last day revision. And that can't be on the last day. That has to be from today. Only then it will be helping you on last day. Otherwise, on last day, if you open the module, you will not be able to finish it. You have to start developing your summary from now so that you are able to revise it on the last day properly. Are you with me, all the students? Yes, are we on the same page? Yes or no? Fine. Now, we were talking about the Constitution Article 265 giving you the power to levy the tax or giving the power to the government to levy the taxes, isn't it? So, Article 265 is one thing. Now, Constitution of India has the different list. What are the three lists which are there? Yes. What three lists we have? The seventh schedule to Article 246 consists of three lists. What are these three lists? Yes, Kunika, union state and union list. Yes, Neha. And concurrent list, Kunika. Yes, that's right. State list, concurrent, and the Pitambar. Yes, that's correct. Yes, Chitra, correct. Yes, Ankit. Yes. Thank you, Guram. So basically, we have three lists. So 7th schedule to Article 246 consists of three lists. State, union, state, and the concurrent list. Right? Now, in all the three lists, there is a power which is allocated to the parliament, to the legislature of the states, and in the concurrent list, the power is given to both the parliament and the state legislature. Right? Now, basically, the 7th schedule says that the matters which are listed in these three lists, the parliament or state legislature both have the powers to make law for the purpose of levy of taxes. Where is the income tax found? Yes, where is the income tax found? In which list? Union, right? So under entry 82 of the union list, that is list 1, the parliament has the laws to make the powers or to tax on income, right? So basically, under entry 82 of the list 1, the, give me a minute. The parliament has the power. Right? Now, this particular list 1 consists of tax on income other than agriculture. Tax on income other than, yes, I'll increase the font size, Pitamba, that's not a problem. Yes, even I was feeling that this is very less, so let me increase it. Yeah. So tax on income other than the agriculture, right? Now, this particular agricultural income which is there, that's the reason why you see it, this is exempt from the income tax. So, agricultural income is exempt from the income tax because of this reason, because the state has the power to tax the agricultural income. Right? So, that's the reason why you see the exemption. Now, you may just, try to mug up this concept. No, agricultural income is exempt. Why? Everything has a reason. At least most of the things will have reason under the income tax. Because the power is not with the central government or the parliament to levy the taxes on the agricultural income. Are we clear? So with this background, we'll start with our Income Tax Act. So we have Income Tax Act. Some problem with the font on the, okay. We have Income Tax Act 1961. Right? We have Income Tax Act 1961. Now, this is going to get changed to the new Income Tax Act, which is going to come. At this point in time, it's just the income tax bill, right? The discussions are still going on, right? So this bill was presented. The committee was formed to study that bill. That committee has presented its report before the parliament, right? Now in the monsoon session, this income tax bill will get laid before the parliament and it will take some time to get passed, right? It will receive then the presidential assent and then it will finally get passed. Tell me one thing, is this the money bill or how is it? Do you know any, like what is this, how does the income tax bill gets passed? And how is it different from the Companies Act, from the other bills which get passed in the parliament? Any idea? Yes. What is a money bill? No? Neha? Yes. What is a money bill? After passing the bill from Lok Sabha and Rajya Sabha. Yes. So what is a money bill first of all? See, there are the bills which are there, which are ordinary bills and money bill, right? A money bill is basically the bill which is going to have the impact on the taxation, borrowings by the government, public expenditure, receipts in the Consolidated Fund of India, right? These bills are regarded as the money bill, right? Now, any kind of bill which is there in terms of like, changing the Companies Act, that is not money bill, right? Now, as far as the money bill is concerned, this money bill is introduced in the Lok Sabha. First, it is passed in the Lok Sabha by the majority of the members. Then it is sent to the Rajya Sabha for its recommendations. Now, the recommendations of the Rajya Sabha are not binding on the Lok Sabha. And then if Rajya Sabha if doesn't give any recommendations, then it is deemed to be passed by the parliament. However, if an ordinary bill is there, it may be introduced in either house of the parliament and it must be passed by both the houses by a simple majority. Are we getting it? So that is between the two. Now the income tax bill which is there, so it is introduced in Lok Sabha and then goes to the Rajya Sabha and then receives the presidential assent. So at this time, we have the Income Tax Act 1961, which came into force on 1st April 1962. Right? The new bill which is there, that has reduced the size of this income tax bill considerably. Like if you read the Income Tax Act now, you will feel like, there are so many provisos, so many explanations, and, everything is here and there. Like if you just talk about the chapter like salary, you go into the salary chapter, then you have to refer back to the rules to find out what are the exemption limits for gratuity, for HRA, right? But in that, they have given everything in the tabular format. Like for example, TDS. TDS is such a vast chapter in this particular Income Tax Act, right? Where you are going here and there to find out what are the rates, what are the meanings. There, everything is put into the tabular format. So it's very easier to read, right? It's like not substantially changing the income tax at this point. Of course, once it comes, we will have to remember all the section numbers again, because we have been told these section numbers umpteen number of times. We have been practicing into that, so now it's registered, so we have to just forget that and remember the new section numbers. But it is like easier to read. It is making the Income Tax Act more easier, right, to understand, to interpret, rather than the current income tax which is there. But substantially not that many changes which are introduced. The substantial portion, which is like the way law was written in this current act, the meaning, the interpretation remains unchanged over there. It's just that it is much easier to read now. Fine. Now, Income Tax Act is one thing. Also undergoes the change every year. How do we introduce the changes to the Income Tax Act? How does the changes happen to the Income Tax Act? After the Finance Bill. Yes, Ankit. Finance Act, Pitambar. Yes, that's correct. Neha, yes. Yes, Geet. Budget. That's the union budget which happens every year. Yes, Chitra. So every year we have something called as the finance bill, the union budget that you see, right? So tell me one thing again, whether this is a money bill or it's an ordinary bill. Yes, this is money bill. Yes, correct, Ankit. Yes, Chitra, this is money bill. Yes. So the Income Tax Act, which is there, no, Richa, this is not ordinary bill. This is impacting the income tax. So this is the money bill. This is not ordinary bill. Okay? So basically, the Income Tax Act can only get amended through another central act, which is the Finance Act. So every year, whatever changes are introduced in the income tax happen through the Finance Act. So you have to read both of them together, the Income Tax Act plus the Finance Act. Are we clear? And then we have something called as income tax rules. Now, what are these rules for? Why are these rules given? Income Tax Rules 1962. What is the job of these rules? For application method? Yes. To clarify the act? No, Neha. Richa? Yes. What are the rules for? To specify the procedures? Yes, Chitra, correct. Yes, Kuram, that's very nice way to put it. Income tax says what to do. Rule says how to do. That's very good way to put it. Yes. So very basically the income tax act, see, it can't contain everything. It just contains the statutory provisions, isn't it? The income tax rules which are there, they basically prescribe the limits, right? Sometimes they will prescribe the way you need to carry out the provisions of the act, right? So basically, they are giving the administrative guidance. For example, section 139 tells you to file the return of income. The income tax rules will give you the forms as I have to file. Right. For example, if some of the sections, this is the file. Now, this form will be notified through the rules. So, the income tax rules will give the basically machinery provisions, or the income tax rules are basically to say how you have to carry out the procedures which are prescribed under the act. Now, if you read the act ever, you will see that it says as may be prescribed. Now, where it is prescribed? So, when you look at the Income Tax Act, in many of the sections you will see as may be prescribed. So, where is it prescribed? In the rules. So, you have to always look into the income tax rules to see what are the forms. See, again, as I told you, you may be doing in your articleship the return filing. Have you ever looked at which rules gives you the power to or which rules is notifying those forms? Which forms are to be used by whom? You have been just told ITR 1 is for this, ITR 2 is for this, but where is it coming from? That comes from the income tax rules, right? So this is how you have to read the act with the rules. The third thing which comes up is the CBDT circular. Now, what are these circulars for? Yes. Amendments? No, Geet. Guidance to department? Yes, Pitambar, that's correct. For clarifications? Yes, Chitra. Circulars are binding on officer of CBDT? Yes, Ankit, that's right. Explanations, Neha, that's correct. To give changes in Richa? Yes. For clarification? That's right, Yogesh. So all of your answers are correct. So basically, see, the circulars which are issued, right? These circulars are issued by the CBDT to clarify certain aspects, like wherever there are doubts, wherever there are certain, interpretation issues, the CBDT suo moto comes up with these circulars, right? The CBDT comes up with the circulars. Now, these circulars are either there to clarify something, to explain something, to give the guidance on something. So, that's what is the role of these circulars. Right? So, it happens sometimes that, the circulars confuse us more rather than explaining, but that's a different story. But these are intended to explain the provisions. Right? Now, the CBDT issues the circular, and it is said that the department is bound by the circular. The assessee are not bound by these circulars. Why is it so? Why is department bound by the circular? Yes, because it is their interpretation not passed in Lok Sabha. Okay. Internal memo, Monica. No, this is not internal. This is published, right? Yes. Yes. Because they are issued by their own department, so it is bound by them. Yes, that's right. So what is the role of CBDT? Yes, what is the role? What is CBDT? Basically, Central Board of Direct Taxes. What is its authority? Yes. Sorry. Yes. What is the role of CBDT? To amend the income tax law? No, Ankit. The income tax law cannot be amended by CBDT. That is only amended by Parliament. They issue all the rates of tax, no richer. The rates of tax are issued through the Finance Act, which is nothing but the act or the law which is passed by the Parliament. Rishi, yes, administering the tax laws in India. Are we clear? So, the CBDT which is there is the authority which is playing the role of administering the income tax. Role to administer the tax law. Yes, it provides the inputs, Rishi, for planning and policy for direct taxes. Collection of direct taxes, Manpreet. Yes, admin work. That's right. Yes, to look that the law is followed properly, Neha. Not really, but yes. Makes guidelines or policies related to income tax. Yes, to some extent, Kunika. So the CBDT which is there basically is the administering authority. It is functioning under the Department of Revenue, Ministry of Finance. See, it's very important to understand each aspect, students. You will not understand this unless you get into in depth of each thing. So CBDT affects body formulation of the policies, administrative guidance to implement the Income Tax Act. So this is established under the Central Board of Revenue Act. It's a statutory body. Right? This is a statutory body which is there, which is having the function of formulating these circulars, right? Giving the inputs to the government for suggesting the change or suggesting the changes to the government to tax laws, formulating these circulars, right? Administering the income tax law. So this is what is the role of the CBDT. Are we clear? So the CBDT which is there is set up under the Ministry of, under the Department of Finance, right? They have underneath the income tax. Are we getting it? So the revenue will have to be bound by the circulars issued by the CBDT. It's like you are telling the board of directors, the employees are saying, no, we are not bound by it. Can we say that? Answer is no. So we can't say to the board of directors as employees that we are not bound by the circulars of which are issued by the board of directors. That's the same way, right? So that's the reason why the revenue is bound by the circulars issued by the CBDT. Are we getting this particular point? Yes or no? So anytime if you see the circulars, the department will have to follow it. The assessee can only follow when it is beneficial. Now, what about the notifications? notification. Yes. Voice is breaking. Let me see. No, it shouldn't. I think there may be some network issue. What are notifications? Yes, students. Notify the applicability of section or act. Okay. Messages or intimation notifying any update or amendment to policy. To amend any rules, Yogesh. Any amendment during the year. Any amendment during the year under the act can only be carried out by the Finance Act. Issued to clarify ambiguities. Konika, no. Notifications are not issued to clarify ambiguities. That is the job of the circulars. Notify provisions. Yes, Sicha, that's right. So, notifications which are there, students, these notifications are issued either by the central government or by the CBDT. This is to basically notify a provision. Let's say, for example, it may be, given in a particular provision as may be notified, right? Or to notify the rules sometime, to notify the statutory authorities sometime, to notify some, you know, let's say, for example, 35 AD, which is there, is giving some deduction, right? Or for example, there are certain, exemptions given to certain statutory authorities. So as may be notified, it is given in the act. So as may be notified, the notification can be issued by the central government if it is mentioned in the act, as may be notified by central government or as may be notified by CBDT, right? For example, the faceless assessment. Under section 144, it is said that the faceless assessment scheme as may be notified by the central government. Now, the assessment scheme which is there is issued through a notification. The act only says that there will be assessment in a faceless manner. But how it will be carried out, that is issued by way of a notification. Are we clear? So, that's what is the notification, to notify something. And this here you can write CBDT circular. These are binding only on the revenue. Right? Also, this CBDT circular, it is only binding on revenue. This also comes from the fact which is written under section 119. What is section 119? Let us see. See, 119 says the board may, from time to time, board is Central Board of Direct Taxes, issue such orders, instructions, directions to the other income tax authorities as deemed fit for the proper administration of this act. And such authorities and all other persons employed in the execution of this act shall observe and follow such orders, instructions, and directions of the board. So 119 itself clearly says that the revenue is bound by the circulars of the CBDT. Are we getting this particular point? Yes. So this is what you have to understand. See, everything which is told has to come by the authority of law. I cannot say something which is not there. Right? So you have to understand all the things in the light of what is said statutorily and what is the reasoning behind. Clear? Now, this is what is the broad level Income Tax Act involves. So when you read the income tax law, you have to first always act. Read what the act is saying. When it says as may be prescribed, look into rules. Look into if on this point any circulars are issued, any notifications are issued. Are we clear? Then after that, you have to look into the case laws. This is again very, very important. So when you look at the Income Tax Act, there are obviously different ways of interpreting a particular provision, right? But it is quite possible that because of this difference in interpretation, some of the assessees may have traveled their case from the ITAT to the High Court to the Supreme Court. And therefore, the decisions may be available. Now, these decisions serve as a useful guidance, right? Now, tell me one thing. When you make an appeal to the CITA, to the First Appellate Authority, CITA, Commissioner of Income Tax Appeal, can you rely on the judgment passed in the favor of other assessee? Yes. Can you rely on the CIT appeal passed in the favor of other assessee? No. Yes, Ankit? No, right? We cannot because first of all, the CIT orders are never in the public domain, right? So, this particular point is that, you can't be basically referring to the CITA's order in somebody else's case because A, it is not in public domain. So, in that particular case, you cannot rely. And secondly, there is no authority which is also provided. Now, once the matter travels from the CITA to the ITAT, Income Tax Appellate Tribunal, can you rely on the ITAT order passed in somebody else's case? Yes. We can refer it to support in the favor of appeal. Okay. ITAT, yes, Guram. Yes. But where is the authority coming? Yes. Only High Court and Supreme Court, Ankit, can be relied? No. ITAT can also be relied. But where is the authority coming? Yes. Can anybody tell me? See, there is something called as stare decisis doctrine. Let me write it here. doctrine of sorry stare diseases. What is this? This is basically the principle that the courts are bound by the decisions of the prior courts or the prior decision. So the CIT appeal which is there, right? The CIT appeal is not a court per se. It is not a quasi court per se. It only holds a significant persuasive value. You may know that okay, CITA has passed the order in somebody else's case, right? But this is not applicable to your case because CITA is not the court. It has a persuasive value. Right? You can highlight the ratio, but it is not the binding because it is at the very first level that it is passed. And you cannot argue with the department that, CIT has passed the order in favor in case of another assessee. So AO should rely on that. So that can't be there. So that is one thing. Now, as far as the ITAT is concerned, ITAT is what? The ITAT is a formal quasi-judicial body created by the income tax itself. Right? The ITAT is a proper judicial authority. And whenever there is a judicial authority constituted, in that particular case, we have these principles which are operating from a common law system, which is one of the doctrine is doctrine of stare decisis or the doctrine of judicial proceeding, meaning to follow the decisions which are given by the earlier court. So the ITAT ruling is binding in nature on all the income tax authorities. Now, if there is, let's say, for example, ITAT has the different benches. One of the bench may be in Mumbai, one in Pune, one in, let's say, Bangalore. Now, let's say a decision of ITAT Mumbai bench is given. Whether it is binding on an assessing officer in Pune? Yes. Yes. No, Pitambar, why? Those who are saying no, why? And those who are saying yes, also why? Maybe yes. It is for a jurisdiction. Now see, Mumbai ITAT and Pune ITAT are covered by the jurisdiction of the same higher level court. Isn't it? Which is the Bombay High Court. So if decision is given of Mumbai ITAT, so this decision shall be binding on the assessing officer because of Pune, because they are governed by the same upper jurisdictional court, which is basically the Bombay High Court. High Court jurisdiction is same, right? So whenever the jurisdiction or jurisdictional tribunal gives any ruling, it is binding on all the assessees or the AOs which are covered on the AOs which are covered by that jurisdiction of that High Court. Now, whether if Bangalore ITAT gives that decision, is it binding on the AO of Mumbai? Yes. No, right? So that is not binding. That can have persuasive value, but that is obviously not binding. It is binding in Bangalore. It can't be binding in Mumbai. Same happens with the High Court. A decision of the jurisdictional High Court overrides all the ITAT ruling. Right? So then in that particular case, that will be followed in that jurisdiction. It may not be binding in the other jurisdiction. However, when a Supreme Court ruling is given, it becomes the law of the land under Article 141 of the Constitution. So, under Article 141 of the Constitution, the Supreme Court ruling becomes the law of the land. So, Article 141 of the Constitution mandates that law declared by the Supreme Court is binding on all the courts within India, meaning any decision of the Supreme Court becomes the law. So, therefore, it is very, very important, students, to understand the case laws which are there on a particular provision. Isn't it? To see whether these case laws are going to help you in any manner. Are we getting this particular point? So when you are reading income tax, it is not just that you will read the income tax law. You also have to understand the cases on the particular point. Clear? Now, while interpreting the Income Tax Act, before we get on to the interpretation, tell me one simple thing. What is the difference between a direct tax and an indirect tax? Yes. Levied on income, indirect tax on revenue? No. Direct tax, assessee himself pays, IDT collected and paid by else. Okay. Direct tax is on income we earn, indirect tax is we. Direct tax is a burden fall on person who is earning the income. See, under the direct tax, the taxability is on income. Under the indirect tax, the taxability is on the supply of goods or services. So under the income tax, the question that is important is who is earning the income? And also where is it getting earned? Because that will decide that basically where is the income going to get taxed for the purposes of the source rule. Whereas so you ask the question, where are the goods or services being sold or offered to tax? Yes, that is right. Under the indirect tax, the burden is on the person directly who is earning the income. However, under the indirect tax, the burden is on the final consumer. The direct tax is progressive in nature and the indirect tax is regressive in nature. What do we mean by progressive and regressive? Yes. What do we mean by progressive and regressive? More income, more tax. Yes, Guram, that's right. So if I have more income, I'm earning higher, I'll be paying taxes on higher end. Right? So that is the progressive. Regressive means it's a flat rate of tax. Even if I earn more, earn less, whatever it is, I will have to pay the same GST on the biscuits, on the same, GST on gold, on the same GST on vehicles, irrespective of whatever levels of my income are. So indirect tax is more regressive, direct tax is progressive. Are we clear? Yes, students, are we clear up till now? Any questions till now? Yes. Any doubts, any questions that you have, anything you want to ask before we proceed further? Clear, everyone? Okay. Okay. So now let us proceed towards the rules of interpretation. One doubt, okay, Manpreet has doubt. One doubt as Income Tax Act is a central law. Then why judgment passed by ICAT in one particular jurisdiction is not applicable onto the other jurisdiction? Very good doubt, Manpreet. See, Manpreet, the ITAT is a quasi-judicial authority, right? ITAT is a quasi-judicial. What do we understand by the quasi-judicial authority? It basically acts like a court, right? It basically is going to act like a court. Now, this is a very, very good question when I ask that, if the ITAT is also constituted by the Income Tax Act itself, then in that particular case, why the decision of one ITAT which is passed in one jurisdiction is not applicable in the other jurisdiction? That's a very relevant doubt. Can anybody give me an answer for that? Yes, let me see who gives the answer before I give the answer. Yes. Doctrine of stare decisis. I'll explain, Neha, again. The question is if the ICAT is constituted by the act itself, right? So then why the decision of one ICAT jurisdiction is not followed by the jurisdiction? Basically because of the, again, doctrine of stare decisis. What is the doctrine of stare decisis saying? Yes, Pitambar, that's correct. So the doctrine of stare decisis is saying that the decision of the court, the decision of one of the court or the tribunal will be by the another. The prior decision of mine will get followed by this particular bench which is there, or this particular court which is there. Now, the decision of the ITAT, right, can be appealed before the High Court. Now, let's say, for example, if Mumbai ITAT has given one decision. Now, can the AO, if he follows that decision in Bangalore, okay, of Mumbai ITAT, he can of course follow that as a persuasive value, but let's say it doesn't want to follow. Right? Now, this decision can be appealed before the before the ITAT in Bangalore, right, which has the separate jurisdiction, and that decision will finally get appealed to the High Court of Karnataka. Whereas if you come to this Mumbai jurisdiction, the decision will get appealed before the High Court of Mumbai. Right? So every ITAT which is there is going to be bound by the decisions of the High Court also in the particular jurisdiction. Mumbai ITAT is bound by the judgment of Bombay High Court. Delhi ITAT will be bound by the judgment of the Delhi High Court. Now, let's say the Bombay High Court has taken a particular stance on a legal issue. Then ICAI Mumbai has to follow this ruling. Now, Delhi High Court may have taken some other stance. Then the Delhi ICAI is bound to follow the ruling of the Delhi High Court. Now, this creates a situation where the two ICAI benches in Mumbai and Delhi arrive at a conflicting decisions. Both are correct because they are following the binding precedents set by their respective high courts. Now, if the ICAI Delhi was forced to follow the Mumbai's decision, it would violate the principle of relying on its own jurisdictional high court, which is not valid. Secondly, ICAI is a tribunal and not a nationwide court, unlike Supreme Court. So the argument that I take for ICAI is same like, for the High Court also. So this is basically because of that reason. So even if the ICAI is constituted under the Income Tax Act, the decision of Mumbai ITAT will not be binding in Bangalore or in any other state. Are we clear about this? Yes. The decision of High Court is also not binding on any other state. Yes, Neha, that's right. Only the decision of Supreme Court shall be binding. Okay. Any other questions, students? See, as I said, Neha, the decision of High Court is also not binding on any other state is again because of the same reason. That the decision of the High Court is only given in respect of a particular jurisdiction where the assessee is operating. Now, High Court is not specific to income tax. High Court is deciding cases beyond income tax also. So there we follow this principle of the jurisdiction. So that is the reason why the decision of the High Court will also not be binding in other states. Yes, is this clear? Yes. Okay, perfect everyone. So you have to understand all these points. These may not be asked in the examination, but these are practically relevant for you to understand or strengthen your foundation. Like you will not get a decision, a question in the exam on this particular point, but this will help you understanding it practically that why we have such a thing. Why we are not following the ITAT decision? Why we are not following a High Court decision? Otherwise, you will always have these questions in your mind. Right? So, as I said that for a High Court, you have a particular territorial jurisdiction. So, you have to follow the decision of the Superior Court as per the principle of doctrine of stare decisis, but not of the similar level court. Clear? Okay, students. Fine. Now let us look at some of the principles of interpretation from your module itself. Now, there are certain principles of interpretation which help us in interpreting the provisions as to how should we read them. These are some golden rules of interpretation which help us to understand how do you interpret a particular provision. So I'm sharing the module itself. Yeah. So first is the rule of literal interpretation. What does this rule mean? That you have to look at the provision as is. You have to look at the provision as is. Now, can you tell me any example of how should we literally interpret a provision? Yes. What do we mean by this? See, the rule of literal interpretation is that I have to read the law as is. This is the first rule of interpretation. So if the section is not having any, ambiguity, for example, if I look at the residential status, an individual is considered as a resident in India if he is staying in India, if his stay in India is more than 182 days, is 182 days or more. Now, what will see anything else over here? The language in this section, the words in this section are clear, precise, unambiguous. So we have to interpret them as is without adding any further meaning, without finding out what is the intention, without finding out that what was the objective. It is absolute rule. Now you will ask why 182? There is no answer to that. Yes, by applying normal English grammar, Ankit. By reading the words as is. You cannot say 182, I'll substitute with 6 months. Right? Or I will round off 181.5 to 182. I cannot do that. Right? I cannot, look out that what was his reason of travel. Whether he was traveling for medical reason, whatever it is, you have crossed 182, literally you have to read, and you are a resident. Whether you came to India for the purposes of travel, whether you came to India for something else, medical, whatever it is. Once I precisely meet the condition, I am a resident. I will not investigate why a person stayed only for 182 or 181. So this is a literal rule of interpretation, meaning read the words as is. The second rule which comes is the golden rule. What is the golden rule? It allows the interpretation on the basis as basically to identify what is the intention. If the words are ambiguous, then I have to understand what was the intention of introducing these provision. Are we clear? So that is the golden rule. When there is an ambiguity, I'm not able to understand from the literal reading. If I give any ordinary meaning, plain reading, it is resulting in some kind of ambiguity. Then I have to look into the intention as to why a particular provision was introduced in the Income Tax Act. Now, where do you gather the intention from? Where do you get the intention? Preamble? Preamble, we don't get the intention. That is only to say that Income Tax Act is introduced for the purpose of taxing on income. So how does it give you the intention? Rules, Neha, no, rules are just procedures. How do you gather the intention from the rules? Circulars, no. Memorandum, yes, Manpreet. So the finance bill which introduces a particular provision under the Income Tax Act always explains the insertion of the provision or amendment carried out in the provision in the section by way of explanation given in the memorandum to the finance bill. So the memorandum to the finance bill gives the explanation why the amendment is carried out in the act. You have to read from there. What was the intention? Let's say, for example, if let's say convert the stock in trade, capital asset into stock in trade. When you convert the capital asset into stock in trade, right? The capital gain is charged when the capital asset is converted into stock in trade in that year. The capital gain tax liability arises, section 45 says 45(1)(a) say, 1A, 45(2) says that the capital gain tax shall be charged, the income shall be chargeable under the head capital gain in the year in which the capital asset is converted into stock in trade. Now let's say I have converted the immobile property into stock in trade. It was my capital asset, I am converting into stock in trade. Now this is a capital gain which is arising in the year in which I am converting, right? Now in that particular case, when the capital asset is converted into stock in trade, that tax liability arises in the year in which, the stock in trade is sold. In the year in which stock in trade is sold. Now, the indexation and all ceases in the year in which it is converted. Now, let's say, for example, I have to invest the amount into NHAI bonds to reduce my capital gain liability. Now, 6 months is the time limit which is given under 54 EC, within which you have to invest the amount. Okay? Now, if you read section 54 EC, what does 54 EC says? You have to invest the amount in the bonds within the period of 6 months from, yes, 6 months after the date of transfer. Yes, Yogesh. So now my capital gain chargeability is arising in which year? In the year when the stock in trade is sold. Transfer is happening when? When the capital asset is converted into stock in trade, because the definition of transfer 247 says that the capital asset, once it is converted into stock in trade, it is regarded as transfer under 247. Now, how can I invest in 6 months after the date of transfer? Because my capital gain liability is arising itself in the year when stock in trade is finally getting sold. So here you have to apply the golden rule. This 54 EC is an exemption provision given to allow the assessees to reinvest their capital gain in the bonds and reduce their tax liability. So this is a beneficial provision. So here they have interpreted in such a way, looking at the intent of the section, that 6 months will be considered in the year in which the stock in trade is sold. From that particular time, 6 months will be considered and not from the date of transfer. Because it is not possible to invest when the capital asset is converted into SIT. So that is the golden rule of interpretation. Another example. Let's say, for example, if a person has sold the property, right? And I have to reinvest that amount when? I have to reinvest that amount within the period of 2 years into a new house. Let's say I'm claiming 54, right? Now let's say there is some procedural delay by the builder and I'm not able to get the possession within the time of 2 years. I have paid the amount to the builder. I have also entered into an agreement. However, I have not got the possession and the 2-year time limit has expired. Now what is the intention of 54? To give the benefit. So here we will still grant the benefit. So here, though the word purchase means that the legal title to that property should have transferred. And according to the AO may say that the purchase is not completed within the timeline because you have not got the property registered in your name. However, this is absurd. So applying the golden rule or purposive interpretation, one can say that the provision of 54 is a beneficial provision. It cannot be interpreted in a literal manner. If it is interpreted in literal manner, it will not give the results, intended results. The legislative intent is to encourage the investment in housing. And if the SSC has invested the funds substantially, Only the possession is pending. The formal registration is pending. He has purchased the house. So the exemption will be granted. Are we clear? So that is the golden rule. Third is the mischief rule. Mischief rule is basically the Hayden's rule, which says that to understand the provision to find out what was the intention of introducing this provision. This is just like golden rule. But the golden rule is used in the case of beneficial provisions, where you're trying to take the benefit of the section. Mischief rule is more like where some anti-avoidance provision is there. We have to understand what was the intention of introducing this anti-avoidance provision. What mischief or the defect it was trying to rectify. And what is the remedy which is now provided. So that is the mischief rule. So basically, this is used to understand the anti-avoidance provision. This is also called as the Hayden rule. Now, you know how mischief rule or understanding of the mischief rule will operate. Basically, let's say for example, 222E, right? Loans and advances treated as deemed dividend. Now, earlier the shareholders, what they were trying to do is, if we take dividends, we'll get taxed. So better we pull out the money from the company as the loans and advance and not pay any tax. So that is the reason why, to correct this mischief, Section 222E was introduced as deemed dividend. Right? So basically, if you receive the money now and you're just trying to camouflage it as loans and advances, even though it is dividend, this is 222E is introduced as a specific anti-avoidance rule to clear that mischief. So the intention of the rule was to clear that mischief that the people were doing. Another example, people used to receive a large amount of money and say it was a gift. And say it is a not taxable receipt because it's a capital receipt. So 56(2)(10) was introduced with a specific intention to avoid these large sums of money being received, because this was claimed as not taxable on the ground of capital receipt. So if you ask why 56(2)(10) was enacted, this was enacted to stop this kind of mischief where people were claiming these gifts as not taxable on the ground of capital receipt. This was basically enacted to suppress this mischief. So this is what the mischief rule talks about. Are we clear? Then we have rule of harmonious construction. What is rule of harmonious construction? As the name suggests, the harmonious construction which is there is basically to read the different provisions in harmony. Let's say, for example, if one provision says something, other provision says something, you have to read it harmoniously so that any inconsistency is avoided. The act must be looked at from the totality. Right? So if there is one provision talking about something else and the other provision is talking about something else, you have to read in consonance the entire act. So you have to reconcile the conflicting provision and not to destroy either of them, or to interpret on, or to select only one of them. Are we clear? So let's say, for example, there is disallowance of interest in case of the income which is exempt. Section 14A. Section 14A says that expenditure which is incurred to earn any exempt income will get disallowed. There is section 36(1)(3), which is what? Deduction of the interest. Now you will say, one section 36(1)(3) is allowing me the deduction of the interest, And section 14A is disallowing the deduction of any expenditure against the exempt income. So let's say a company has taken a loan, it has paid the interest, and this interest is used to basically earn some exempt. This particular loan was taken to earn some exempt income, right? So now, as per 3613, one can argue that entire amount of interest should be allowed as the deduction, as the capital is borrowed for the purpose of my business. However, the tax officer can say that no, this loan is used to earn the exempt income and therefore the amount of interest should be disallowed. Now, what you have to see is that section 3613 is a general provision. Section 14A is a specific provision to disallow the interest in case of exempt income. You have to reconcile and harmonize. So, an assessee is entitled to interest deduction if it is for business. However, if the interest is paid for the loan utilized for the purpose of earning exempt income, then that interest will get disallowed. So the specific provision will override the general provision. Are we getting this particular point? This principle is also called as specialia deribus non derogant. So what does this mean? This means that the Latin phrase is that generalia specialibus non derogant, which means that the specific rule will override the general rule. Are we clear? Last one is the principle of beneficial construction. It means that if there are two views possible while interpreting a provision, you should adopt a view which is beneficial to taxpayer. So let's say, for example, if a particular provision is asking you to file this particular form by so and so due date, and let's say you have filed it, but you have filed it little late. So now this provision was intended to give you the relief, let's say some rebate, let's say some foreign tax credit relief, and you have not filed the form on time. But this provision was intended to give you the benefit. So you should follow the beneficial construction of that rule. Right? Let's say, for example, if it can be claimed only on filing form 67 time. Now, let's say you have not filed the form 67 on time, you have filed 10 days late. So, in that particular case, the benefit should not be denied to you altogether. Are we clear? Any questions? Any doubt? Yes? Yes or no, students? Any doubts? Any questions? Clear? Okay. So let us take a break over here and then let us take a break of 10 minutes. towards the other other interpretation rules which are there, there is this rule of adjustum generis. Now, what does this mean? So this particularly means that the meaning of a particular word, right? You have to ascertain on the basis of the other terms which are used in that sentence. Now, let's say, for example, if you look at certain words in a particular sentence, how do you understand the meaning of it? That's what is the rule of adjustum generis talks about. So let us take an example to understand this particular rule. So let's say we are talking about a definition, right? So maybe, definition like fees for technical services, which means managerial, technical, consultancy services, right? Or any other definition provision that you may talk about. Now, in that definition provision, if let's say there are two, three words which are written. Now, how do you understand that particular word? Understand by the way the words neighboring it. Right? Let's say, for example, if the term is, let's say, tax, interest, penalty, or any other sum. Now, any other sum, what does it mean? So you have to understand from the neighboring words, tax, interest, penalty. For example, let's say the section 32, it provides the depreciation on the tangible and intangible assets. Right? Now, intangible assets are defined. Intangible assets are defined, right? Isn't it? Your intangible assets means what? Trademarks, not goodwill. Goodwill is not eligible for, sorry, depreciation now. The trademark, the patents, the copyrights, right? So when you read section 32, it says know-how, patents, copyrights, trademark, licenses, or other business or commercial rights of similar nature. Now, what do you mean by other business or commercial rights of similar nature? So you ascertain the meaning of that word from the words which are written besides it, which is like basically any other kind of intangible rights which are similar to the franchisee, trademark, licenses like that. Are we getting it? So that is the principle of the adjustum de generis. Next is the nocitur est assis. Now, what does this mean? This is the word which the meaning of the word derives the color from the surrounding words. Adjustum generis is what? The word derives the meaning from the category or class of the words which are written. Like, for example, I told you about the definition of intangible asset. Nocitur est assis is basically if a word is deriving the meaning from the neighboring words. Like, for example, fees for technical services mean managerial, technical, or consultancy service. Now, the term technical means what? There were contentions of the revenue that the technical would mean something of nature in a way, IT services, information technology services. But the courts held that no, the term technical service has to derive the meaning from the neighboring terms, which is managerial and consultancy. Managerial and consultancy services require the involvement of human to provide the services. So, we cannot include the automated IT services in technical. Technical also, the human element should be there. The services should be provided by a human. Only then it will be technical. So that is the rule of nocitur est assis. Then we understood what is stare decisis, right? So this is what we understood. Are we clear with the rules of interpretation, students? Yes or no? Yes? Now, under the Income Tax Act, we have different kinds of provision which requires different set of interpretation. One is the charging provision. By the charges, charging provisions mean what? Section 45, Section 28, right? These are the charging provision which says that the income shall be charged under the head PGBP. The income shall be chargeable under the head capital gain. Section 22 for house property. Section 4 for the Income Tax Act. Right? Section 16 for your 15 for your salaries. 56 for your capital income from other sources. So these are the charging section. The charging sections are to be interpreted literally in a strict manner. No here and there, because they are creating a charge. They are trying to fix the liability on the particular person. So the charging sections are to be read as is without finding what is the intention. These are to be interpreted literally. Then we have machinery provisions. Machinery provisions like what? TDS, TCS, advance tax, filing of return of income, right? So refunds which are there, granting of refunds, these are to collect the taxes. So these have to be interpreted in a beneficial manner. So to make the rules workable to collect the taxes, not to interpret in a strict manner and rendering it impossible to operate. There may be some here and there, but let it be. You have to interpret in a beneficial manner. Then you have penal provisions under the income tax, which are penalties basically. Again, these are required to be construed in a strict manner. Read it as is. But if there is some kind of ambiguity, then allow the benefit to the taxpayer. Basically, apply the golden rule over here. Then you have deeming provision, section 9, which deems the applicability. Again, these has to be strictly interpreted. No here and there. Are we getting it? Then you have appeal and refund provision. These have to be interpreted liberally so that even if the assessee has delayed the filing appeal, he has not filed a certain form for appeal, you apply it in a reasonable and practical manner so that to make it workable for the assessee. You have to interpret liberally. Similarly, refund. If he has not done so and so, we will not grant refund. No, it has to be. It is his right to get the refund. So you have to interpret these provisions liberally. Exemptions, reliefs, as I told you, these are to be interpreted in the light of object and purpose of the Act. 54, 54F, we did a lot of examples. Now, in interpreting the Act, you have to look at the explanations. Explanations under the Act basically clarify the meaning of the main provision, right? You have to look into the provisos. Provisos are what? Provisos are the exception. In the new income tax bill, you will never find these provisos and explanations. These are all removed out or integrated into the section itself. But here, the provisos are very well part of the Act. They are carving an exception. Provisos are basically provided that, provided further that. So basically, the main provision is there, and then there are exceptions which are given by way of the proviso. These are to be interpreted harmoniously with the section. Are we clear? So the provisos and explanation are to be read alongside the particular section itself. Then you have non-obstant clause. What are non-obstant clause? Notwithstanding anything contained in any other provisions of the Act. Your example is also given. Section 43B provides that the profit and gains from business or profession right, will be computed by taking into account these deduction under 43B, which are only allowed if you make the payment before the due date of filing the return of income. So it starts with notwithstanding anything contrary in any other provision of Act. These override the other provision of the Act. These are the specific rules which override the general provision of the Act. Then you have something called as marginal notes and headings. What are marginal notes and headings? See, when in the finance bill, the provision is introduced, there is a heading given to that provision. And there are notes written by side of it. Let me show you an example to that. Or let me see. See, this is a finance bill which is there. This is how the finance bill appears. See, in section 12AB, this is written here amendment of section 12AB. And even when you go towards the end of the finance bill, this is giving you the statement of objects and reasons. And this is giving you note on clauses, why a particular provision is introduced over here. Right? So these headings, these notes are very, very important. So heading and marginal notes, they give the reflection of or intention of the legislature. Right? Even when you, let's say for example, look at the Income Tax Act. See, it says previous year defined, charge of income tax. So these are the headings given to a particular section. So this tells you that what is the particular provision for. Similarly, it happens in the finance bill. Now, this gives you the hint about what is the provision about. Also, one more important thing. If you look at the Finance Act, this is divided into different parts. So, you have the preliminary, which is short title and commencement. Every law has always the short title and commencement. Short title means the here it is saying the Finance Bill 2025. But if you look at the short title, it says what is this particular provision. So this is to give effect to the financial proposals of the central government for the bill for the financial year 25-26. So this is a short title and the reason for what it is being entered and what it will be now called. This is the preamble and then it says this act may be called as the Finance Act 2025. What it will be called and when it will get commenced. So this is one very important thing. Secondly, when you look at the finance bill, then it contains all the amendments. And at the very end, if you see, they have three parts under chapter 5. So, under part 3, there are three schedules. First schedule, second schedule, and the third schedule. Now, basically, what it means. What are these particular parts and the schedules to the Finance Act? So, the part 1 which is there to the Finance Act of the schedule first, of the first schedule, this specifies the rate of tax which is applicable to the current assessment year. So, let's say for example, if I go to this first schedule at the end, we are only looking at the first schedule, okay, for now. See, if you see here, this is part 1. this is the first schedule which is having this part 1. Now these rates are applicable for the current assessment year, not for the current financial year. I'm talking about the current assessment year, because when the bill is passed, right, the bill gets passed by 25th or 28th of March. At that point in time, already 1 year is ongoing, which is the assessment year. The previous year is already finished. The assessment year of that year is going when the bill gets passed. Right? So, this is applicable for the rates which are there in the current assessment year, like for the last previous year. The part 2, if you will see, it talks about the rates of the TDS. This is for the rates of the TDS. And part 3, which is there, this is applicable for the current financial year. So if you go to the part 3, this is C, rates for deducting the TDS or advanced taxes for purpose of computing advanced tax for the current previous year. So this part 3 will become part 1 in the next year. So every year you will see that part 3 of the last Finance Act becomes the part 1 of the current Finance Act. Because part 3 is for the current year, which becomes applicable in the next year for the next AY. And in the part 3, your changes to the tax rates are seen. So you will never see the changes in the tax rate in the part 1. You will see it in the part 3. Are we getting this particular point? So this is how the Finance Act has to be read. Yes or no? So how do I get this particular information? If you come to section 2, it says the income tax shall be charged at the rate specified in part 1 for the assessment year commencing on 1st April 25. So this is basically part 1 is talking about the assessment year which is ongoing, which is nothing but the carry forward of the part 3 of last year. No rate change are applicable in the assessment year. The rates change happened in the previous year. Are we getting it? So this is what part 1 says. Then if you look at the part 3 which is there, that is applicable for the current previous year and not for the current assessment year. So all this is talking about is the last previous year and the current assessment year. Are we clear about this? Yes or no? Did you get this? Yes? Yes or no, students? Okay? Yes, good. Now, if you see for the part 3 here, let me show you for the part 3 also. See, it says subject to the provisions of 10 cases in which income tax has to be charged in the these section, or the TDS has to be deducted, or the advance tax has to be paid at the rates, such income tax shall be charged, deducted or computed at the rate specified in the part 3 for the first schedule. So basically this is providing for the current previous year. That is for the last previous year. That's why they said for the 1st April 2025 AY, the assessment year which is starting. Are we clear? Okay. So this is how marginal headings are to be interpreted. Next is basically the definition clauses and undefined word. Definition clause is basically your section 2 which defines something. Again, words which are defined have to be understood in their ordinary meaning, no here and there meaning. No definition can be borrowed from any other statute unless the Income Tax Act refers to some other statute, and otherwise we cannot borrow the definition from any other statute. What are the external aids? So basically first you have to look within the Income Tax Act itself. In case there is some ambiguity, like first you understand the, let's say, the meaning of the particular term, whether it is defined in explanation, whether it is defined in section 2, whether any proviso is carving out any exception, whether the income tax rules are saying something else. So basically first you have to look within. Then still provision is ambiguous. Then you look at the legislative history. Like you look at why this particular provision was introduced. You look at the report of commission, law commission, parliamentary committee. For example, right now the income tax bill 2025 is introduced. Now the committee was formed, select committee was formed to discuss the provisions of the income tax bill, and they gave a report also. And that report discusses each and every aspect, why they are introducing a certain provision, why the recommendations are rejected. That is a very, very important document. In case of interpretation issue in the future, this will be referred to understand why a particular provision was introduced, why a particular provision was not amended. That is written in the parliamentary committee report. You look at the circulars. Even though they are not binding on assessee, but if it's beneficial, it will be. You look at the finance minister's speech to understand what was the intention of introducing a provision. Look at the explanatory memorandum. And if even if there is no definition available, then you look at the dictionary meaning. Clear? So this is how the Income Tax Act has to be interpreted. Are we clear about this? Yes or no? Okay. Now we will start with the Section 4 of the Income Tax Act. What is Section 4 of the Income Tax Act? Let us look at Section 4. Charge of the income tax. What does it say? We are going to look at the bare act. No here and there. You are in CA final. You should be knowing how to read the bare act. What Section 4 subsection 1 says? Where any central act enacts that income tax shall be charged for any assessment year at any rate or rates. Income tax at that rate.
Excuse me, मैम.
Yes.
मैम बहुत छोटा छोटा है, इसको थोड़ा सा आप बड़ा करना.
भी ठीक है?
Yes, ma'am. Thank you.
Okay. Where any central act enacts that income tax shall be charged for any assessment year at any rate or rates, income tax at that rate or those rates shall be charged for that year in accordance with and subject to the provisions, including provisions for the levy of additional income tax of this act in respect of the total income of the previous year of every person. What does it mean, students? What is important over here is where any central act sorry, this is becoming too dark. Where any central act enacts that income tax shall be charged for any assessment year. So income tax is charged for any assessment year. Right? At the rates or rate, income tax at that rate or those rates shall be charged for that year in accordance with and subject to the provisions of this act in respect of the total income of the previous year of every person. Let us break this down one by one. Fine. Let us break this down one by one. Section 4. This is my charging section. Right? What does section 4 says? That the total income shall be, I'm simplifying this, charge, okay, 1 second. Total income of the previous year shall be charged to the income tax at the rates specified in the Central Act shall be charged or assessed in the assessment year. And this is total income of every person for a previous year. For the previous year. So basically what we are trying to say is, first of all, the total income of the previous year shall be charged or assessed to tax in the assessment year. This is the first concept, isn't it? Now, if you see in the income tax new bill, this concept of previous year and assessment year are done away with. We are not getting into that. Right? Now, the previous year, whatever you earn the income, it will be charged to tax in the assessment year. Of course, there are exceptions to this particular rule also. So, now we will focus on these concepts of, first is the total income. So, total income, what they have said is here, if you look at, it says, this shall be charged in accordance with and subject to the provisions of this act. So basically, section 4 is charging section, but this is subject to the other provisions of this act. What do we mean by the term subject to? What do we mean by the term subject to? Yes, students. Based on what is there in other provisions of the act? Yes, Yogesh. Binding on, no Richa. Depending on, yes, Pitambar. So subject to means that I'm creating a charge, but this is subject to what other provisions are saying. I'm teaching you, but subject to what you are listening, isn't it? So it's dependent on the other provisions. So how do you compute the tax? What are the exemptions that is provided in the different sections of income tax? So this charge which is created is subject to different exemptions, deductions, carry forward, losses, computation, all of that. Isn't it? So section 4, even though it's a charging section, it is subject to the other provisions of the Act. Now, what is total income? What is total income? What is the difference between depending and binding? Richa, binding is that I'm bound by basically the judgment of the High Court. Dependent mean basically, let's say for example, I am saying this, but this is dependent on the other provisions in the Act. How they are basically giving the exemption, how they are basically giving the deductions. Are we clear? Now, what is total income? I told you, when you want to interpret something, look out within the Act itself. Do we look into the dictionary meaning? Answer is no. We don't look into the dictionary meaning. We look into the definitions of the Income Tax Act. Right? Section 245. Start using the section numbers. The more you will say the section number, the more you will remember. Do we need to remember all the section number? As much as you can. You're writing a CA final paper. As much as you can, you have to remember for your exam. Are we clear, students? So 245 of the Income Tax Act defines the total income. What does it mean? Total income means the total amount of income referred to in section 5 computed in the manner laid down in this act. So, this is saying total amount of income referred to in section 5 and computed in the manner laid down in this act. So basically what we are essentially trying to say, total income is defining the total amount of income. Now what is therefore income? Total amount of income. So what is income? Is income defined? Yes, is income defined? Yes or no, students? Yes, it is defined under 224. Income includes. It's an inclusive definition. What is the inclusive definition versus the exhaustive definition? What is the difference between that? What is the difference between the inclusive definition and the exhaustive definition?
In inclusive, there is a chance to add some more things, and in exhaustive list, there is a no space for any other thing.
Yes, that's right. So income includes means it's an expansive definition. Like it can include alike things which are even not included. Extensive means capital asset means whenever the term means is there, you cannot add anything. It means only what it is written. Includes mean you can add many things beyond what is included. Plus other things. Yes, Pitambar. So this is the inclusive definition. Income includes, there are multiple items which are mentioned over here. Right? So first of all, it has to be the income. If a receipt is not an income, then in that particular case, it will not fall within section 4 itself. So capital receipts are not income unless specifically listed over here. For example, if you see any income chargeable under 28.2 to 28.3, 41, 59, these are capital receipts. 28.5, this is a capital receipt which is specifically considered as an income. 56 to 10, this is a specific considered as an income. It is a capital receipt. So unless these are included over here as capital receipts, this will not be considered as income. And if it is not income, you cannot charge it to tax. So what does charging section says? Total income. Total income means what? Total amount of income. So unless it is income, don't go to charging section. Yes or no? So income. Income is defined under 224. Right? Refer section 5. What is section 5? What is section 5? Scope of total income. Yes. Section 5 is nothing but the scope of total income. If you go back to section 5, this is scope of total income. What does scope of total income provide? Give me a minute. Scope of total income basically provides for resident ROR what is taxable, for RNOR what is taxable in India. So that is basically deciding what is the scope of total income. So total amount of income, first it has to be the income. Then it has also to be covered within the scope of total income. And then it has to be computed in the manner laid down in this act. So basically section 14 to section 50, not 59, 80. Or rather I would say 90. Right? So this is laying down the manner in which it is going to be taxed under the act. Right? So computed in the manner laid down in this act. So total income of every person. Now what is a person? Who is a person? Again, person is defined under section 231. 231. Person includes, again an inclusive definition, individual, HUF, company, firm, AOP, BOI, whether incorporated or not, local authority, every artificial juridical person not falling within any of the preceding subclauses. Are we clear? So, who is a person? Individual, HUF, firm, right? AOP, BOI, and company, of course. So, total income of every person for the previous year shall be charged or assessed to income tax at the rates specified in the Central Act. What is the Central Act? So, the general rates are given through the Finance Act. So, Finance Act, yes, Manpreet, gives us the general rate. Yes, Pitambar. So, the general rates we just now saw that are coming through the Finance Act. Right? And as I said, you have under that part 1, part 2 and part 3. So, what you will refer here? So, my part 1, under the first schedule, you will get the tax rate. Part 1 is for the tax rates of last previous year. The part 2 is for the TDS rates. And the part 3 is for the tax rates for the current previous year. And then you have the specific rates given under the Income Tax Act itself. For example, Section 112, 112A, 111A. These are the rates which are given under the Income Tax Act itself. Yes or no? So there are certain rates which are given under the Income Tax Act itself. Which are the general rate? Which are the specific rates? Sorry. So you have the rates under the Act. Specific rates are given. The general rates are given by way of the Finance Act. Clear? Now, total income of every person for the previous year shall be charged or assessed to tax in the assessment year. Now, what does this mean? So, whatever income that I am earning in my previous year will be charged or assessed to tax in the next assessment year. Yes or no? Now, there are certain exceptions to this rule. There are certain exceptions to this rule. What are the exceptions to this rule? The exceptions are in the nature of where the income of the previous year shall be charged or assessed to tax in the previous year itself. I'm not going to charge it in the next year. I'm going to charge in this particular year itself. So, what are these exceptions? Let us write it down. So, income of the previous year shall be charged or assessed tax in the assessment year, right? But what are the exceptions? Number 1, non-resident engaged in the shipping business. Section 170. Now let us say, for example, students, there is a non-resident, right? He is engaged in shipping of passengers or goods, whatever. Now he may come to India and deliver the goods, or carry the passengers, deboard them, and he leaves. So basically he is earning the income from the sale of tickets or from the carriage of the passengers or from the carriage of the goods. Now what if he doesn't come back to India? Is there any way we can collect the taxes from him? Yes. Can we collect the taxes from him? No, right? So what we'll do? We'll just sit quiet, not able to collect any taxes from him, right? So in order to prevent that, these exceptions are created by the back or the tax back, right? So in that particular case, that's the reason why they have created this exception. So basically, the income of the previous year is charged or assessed tax in the assessment year. But imagine a company which is carrying the docks, which is carrying the cargo and collect the freight charges here and leaves. It has no office here in India and will never return back also maybe. So should we wait for the assessment year to collect the tax from them? What if they run away? So that's the reason why we have section 170. So 172 says that the income of these shipping companies or shipping businesses of the non-resident shall be charged to tax in the same year in which it is earned, and it will be collected also in the same year. Are we getting it? Next is person leaving India. So person leaving India. So any person who is leaving India, in case the assessing officer feels that this particular person has no intention of returning to India back, then in that particular case, the income of that individual is chargeable to tax in that year itself. We see that lot of rich people, they take away money, they just leave India and may never come back. Now, is it possible to collect the taxes from them? Answer is no. So that's the reason why in these cases, section 174 says that in the same year, the income will get taxed in the year in which he is earning the income. Next is AOP or BOI formed for particular purpose. So basically, if the AOPs and BOIs are formed for only, let's say, doing the construction activity, and then they are going to get dissolved. The constitution itself says they are formed only to do a particular activity or construction of a project, let's say construction of maybe some flyover, and then they will get dissolved. Now, once they get dissolved, how will we collect the tax from them? So in that case, the Act says that in that particular case, the income of the previous year shall be charged in that previous year itself. So that's section 174A. Next is person likely to transfer the property to avoid the tax? Right? So if, let's say, for example, a person is likely to transfer his assets, he may know that there is some raid going to happen, or there's some recovery going to happen. He has defaulted all his loans also, and he's likely to sell his properties, his cars, everything with a view to avoid the recovery of income tax. In that case, the income of that previous year shall be charged to tax in that same previous year itself. Last one is the discontinued business. In case the business is going to get discontinued in a particular year, then in that case, the income shall be charged or assessed to tax in the same year. Because obviously, we won't be able to collect the taxes from these businesses if they get discontinued. Are we clear, students? Yes or no? Any questions? Any doubt? Yes? No doubts? No questions? Is this very, very clear? Okay. Now, coming towards, so we are done with the first part of this particular chapter. Now we'll talk about the tax rates. Right? We are going into the tax rates now. Now, first of all, we will do the tax rates for the individual. So, for the individual, what are the tax rates that we have? Yes, we have two regimes. For individual, for HUF, for AOP, BOI, and artificial juridical person. We have two tax regimes. Right? What is the difference between AOP and BOI, just in case if somebody doesn't know? Can anyone tell me? What is the difference between AOP and BOI? AOP contains company, BOI only individual. Yes. But these are specifically formed for a purpose when the persons come together to do an organized business activity. So in that particular case, it is considered as AOP and BOI. Basically, when they come together to do the organized activities. Are we clear? So that's AOP and BOI. Now coming towards the tax rate. So first we will talk about the tax rate for the individual AOP and BOI. So the default tax regime is section 115 BAC. So for the individual, right? We have one is the default regime, which is under section 115 BAC, right? And then you have the optional regime, right? Now, first we'll talk about the default regime 115 BAC. Okay, this is not only for, sorry, individuals, but my mistake, individuals, HUF, AOP, BOI, and artificial juridical person. Fine. Now, if you see this particular 115 BAC, now this is looking very confusing because I'm not going to read this particular clause because this was applicable for any previous year relevant to the assessment year after 1st April 21 but before 1st April 2024. So this is prior to 2024. So this is not applicable to us. This is applicable after the 1st April 2024. So even this is not applicable for me. We are going to read this. For any previous year relevant to the assessment year beginning on or after the 1st April 2025. Right? So what does the section say? Notwithstanding anything contained in this act. What is this clause called? What is this clause called we just now understood? Overriding clause, non-obstant clause. It is not called overriding clause. The meaning is it is overriding the other provisions of the act. But this is called as non-obstant clause. We just now discussed, students. It overrides all the other provisions of this act. And here we are not discussing about the general rate. This is a specific rates given under the income tax itself. We were told you Central Act enacts the rates. What rates? Specific rate is what we are talking about. So notwithstanding anything contained in this act, but subject to the provisions of this chapter. Subject to the provisions of this chapter. Which is the chapter? Which chapter they are talking about? Yes. So if you read the Income Tax Act, it is divided into different chapters. So this is talking about this particular chapter, which is the chapter number 12. This is the chapter 12 where 115 BAC is there. 115 BAC is part of this chapter 12, which is determination of tax in certain special cases. Right? So this is talking about tax on income of individuals. So what does this mean is, so if I look at this particular chapter, I don't know why it's not showing under this chapter. So it means that notwithstanding anything contained in any other provision of this act, meaning it is overriding the entire act, but this is still subject to, this is still subject to the other provision. What is this? They went under maintenance. I was teaching you they went under maintenance. This is gone. I can't help it. Okay, let us proceed further from your module itself. So this is saying, notwithstanding anything contained in this act, meaning it's overriding all the other provisions of the chapter, all the provisions of the act, but this is still subject to this chapter under which this section is contained, which means that the specific tax rate under 115 BAC will apply, overriding any tax rate that is given under that. But if any special tax rates are given under this chapter 12, then that shall apply and 115 BAC will not apply. We'll understand the meaning of this shortly. So what does 115 BAC says? These are the tax rates which are given. What are the tax rate? So up to 4 lakh, it is nil. 4 lakh to 8 lakh, this is 5%. 8 lakh to 12 lakh, it is 10%. 12 to 16, it is 15%. 16 to 20, it is 20%. And 20 to 24, it is 25%. And above 24, it is 30%. So we'll just put it over here. Nil. Four lakh to 8 lakh, 5%. 8 lakh to 12 lakh, 10%. 12 lakh to 16 lakh, 15%. And 16 to 20 is 20%. 20 to 24 is 25%. Twenty-four is 30%. Okay, is this clear? Okay, is this clear? Yes. Now, this is what are the tax rates given under the old regime, new regime, which is the default tax regime given over here. Now, if you want to opt out of this particular regime, you have to exercise that option. And under the old regime, the optional tax regime, the tax rates are up to rupees 2.5 lakh. This is nil. Then 2.5 lakh to 5 lakh. This is 5%. Then 5 lakh to 10 lakh, it is 20%. And greater than 10 lakh, this is 30%. Now, this is for the only resident individual. Sorry, this is for the individual and HUF. Sorry, everyone. But in case of resident individual or HUF, resident individual, more than 60 years, this is one. In case of resident individual who are more than 60 years but less than the 80 years. So who are basically more than 60 years and less than 80 years at any time during the previous year, greater than equal. For them, it is up to rupees 3 lakh, nil. 3 lakh to 5 lakh, 5%. 5 lakh to 10 lakh, 20%. And greater than 10 lakh, 30%. Under 115 BAC, there is no bifurcation like this. And for resident individual greater than equal to 80 years. So basically this is only for the resident individual. If a person is a non-resident senior citizen, this will not apply. Remember this. So up to rupees 5 lakh, nil. 5 lakh to 10 lakh, 20%, and greater than 10 lakh is 30%. Are we clear? Now in this connection, students, there is this clarification which is issued by the CBDT through a circular. See, circular is clarifying something. I told you the job of circular is to clarify. Now, what if the person has attained the age of 60 years or 80 years on 31st March because his birthday is falling on 1st April of the next year. So see, my birthday is, let's say, 1st April. So I will be completing my 60 year on 31st March itself. Right. So in that case, his birthday is falling on the next year. So should we give him the benefit of the higher tax rate? So the CBDT has clarified through this circular that a person born on 1st April would be considered to have attained the 60 or 80 years on 31st March itself. That is the day preceding the anniversary of his birthday. So he would be considered as a citizen, a senior citizen or a very senior citizen on that basis. Are we clear? So if a person has completed that particular year on the last day itself, like if your birthday is next day, I will be completing my basically age one day before my birthday. So in that case, I will be eligible. Are we clear about this? Yes or no? Any questions? Any doubt? Any doubts you have, students? Yes? Any questions? Any doubt? Fine. So therefore, if you look at a resident individual whose 68th birthday falls on 1st April 2026, would be treated as having attained the age of 60 years in the previous year 25-26 itself and not in the year 26-27, and would be eligible for higher basic exemption limit of 3 lakhs. Similarly, it will be for the person whose birthday is on 1st April and is completing the 80 years. Clear? Yes? Yes, this is for AY 25-26. Sorry, AY 26-27, not AY 25-26. This is 26-27. Okay. So I think we can stop here because we will then need to discuss about the surcharge as well and the rebate as well and how the income is computed under this. So that we'll do it in the next class. So if you have any questions, we can discuss. Otherwise, we can stop here for today. For non-resident individual, yes, Ankit, the first case will be applicable if he is a senior citizen. That is correct. This is only for resident individuals, Ankit. Fine. So what you're supposed to do is you're required to revise this, spend some time reading it back because then it will help you registering. And as I said, from the next class onwards, if you have not made the notes, you're required to make the notes and then sit for the live class. Clear? Any doubts, any questions before we close the session? Okay. So thank you so much. We'll meet directly on Sunday and I request you to please read and come and revise and come before the next class. Fine. So thank you so much. we can close the session.
Okay, ma'am. Thank you, ma'am.
Thank you. Yes.
Thank you, ma'am.
Thank you.
Recording stopped.